Hi there, Serial Trader here. Let's check in with the major US indices and starting off with SPX. So looking at our wave count here, we are definitely extending to the upside, stronger than I may have originally thought, but not overly surprising given that if this 1-2 and then 1-2 count is accurate, this technically should be a third of a third wave that we're working, in which case perfectly natural to expect some unusual strength. But as far as these shorter term subdivisions go, you could easily make the case that this smaller third actually peaked up here. Okay, something along these lines. And that this was actually our fourth here. Okay, which matches a little more proportionally with this 2, our first 2. And that now we're, in the midst, not necessarily complete, but working this fifth wave of the third. And you got to respect the upside here until it at least starts reversing and breaking some minor support levels, which it just hasn't done yet. In fact, so far, nothing but higher highs and higher lows. So until that changes, no reason to expect otherwise, even though it does look quite extended. And then, whenever that is done, you'd expect some sort of corrective decline at that point. But give the upside the benefit of the doubt until you have a reason not to. Now we'll head over to candlestick chart here. Now, I mean, if you look at this on SPX, so we're just knocking on the door. I mean, you could get the new all-time highs within a day or two if you had a couple, fairly strong days. And the thing is, once you get past the all-time high, you'd expect some follow-through, any short-term weakness aside, because there's a lot of people that like to buy breakouts. So you can almost call it a FOMO rally, a fear of missing out rally. So keep that in mind. As overbought as we are, and as extended as we look short-term in our wave counts and all that, if we actually do break the high, I would not be surprised if it just started running significantly. Okay, now if we just go in closer, so since the last video, I believe we had this doji star. Well, the very next day, we had a bullish engulfing, very strong day, closed near the high of the day. And then today, a little bit of a pullback, but nothing significant. In fact, we didn't even get halfway down the candlestick of yesterday. Still well above the 3T line and well above the T line. So still looking strong here. And again, no reason to look down until it at least starts getting below the T line, or maybe you have a candlestick reversal signal or something. We have none of those things at this point, and we're so close to all-time highs. So it's an interesting point. Certainly wouldn't be surprised if it just keeps running here a little more. Okay, and part of the weakness, I guess you could attribute, relative weakness. It's not weak, but a little bit of a pullback today in SPX. Facebook's a pretty large constituent of the S&P 500, and it obviously had a very bad day. We'll look at that in a moment. But first, the Dow Jones Industrial Average. So the Dow actually got above this resistance level that's been here for the longest time. And not only got above it, gapped above it, and closed well above it. So the Dow actually looking like a possible breakout here. Unless this gap gets quickly filled and we turn back down, this could start running in its own right. So keep that in mind. Dow showing some strength here finally. All right, we'll go to the NASDAQ composite. And interesting, so since the last video, I believe we had this rejection off the highs and then a slightly negative close, which may have been a warning, but so far it didn't materialize anything bearish. And then yesterday we had a legit bullish engulfing. And again, another new all-time intraday and closing high. And then today, again, Facebook's quite heavily weighted in the NASDAQ as well. But despite that, we're just sitting on the T line. So NASDAQ showing some resiliency here despite that enormous drawdown from Facebook. So unless the NASDAQ can get below the T line and have the 3T line cross below, I wouldn't expect a whole lot of weakness just yet. It could still have more strength here. I mean, we just had a new all-time intraday and closing high yesterday, so certainly no reason to be bearish just yet. Not necessarily a great entry for a long trade, but hey, it could keep running. I'm not saying it can't. And the VIX, well, with all this equity strength, obviously the VIX is just very subdued near the bottom end of its range. Still no red flags here from VIX, and it could just remain in this condition for a while. We'll have to keep checking on it. Now, Facebook. All right, if you'll recall, Facebook presented quite a good opportunity the last time. Had that big down move, okay? And at the time I had identified it as a nice ABC zigzag down, a corrective move that once complete would be more than fully retraced, right? If you go back far enough, the video exists. And we did a call back spread on that, and that proved nice and profitable, and actually had a reverse Fibonacci extension target, and the 1.382 multiple of this ABC down was our one of our high confidence targets. Well, look, we actually somewhat exceeded that. The target was 213. We went as high as 218, so that's quite nice. Got above the 1.382 target. I actually closed that back spread just before options expiration on July 20th. So got out with a nice profit and then just sat back. No need to take a position after that in such an extended looking move. And after, if you even look here, we got a 1, 2, 3, 4, 5 up. Okay, after our 3 down, we have a 5 up. So after you have a 5 up, you expect a pullback of some sort. You don't necessarily expect this, but nonetheless, 5 up, looking mature. You expect some downside once it completes. So earnings came out, and boom, we're down, almost 19% on a closing basis here, 18.96%. Now, not necessarily an opportunity yet. I mean, there's hardly any price data to analyze. We just have this big gap down in a single day of trading. But one thing I thought I'd point out that's kind of interesting, if we do a Fibonacci retracement, so from the bottom here of this up move to the top, okay, and let me just get rid of some of these relationships, present them. Okay, we actually are just sitting roughly on that 618 retracement of this initial move up, which is a very common retracement level. Now, that's not necessarily the bottom. It could be, but what I'd like to see is, okay, we've had a huge decline. I'd like to see some sort of corrective bounce, and wouldn't be surprising to have a pretty strong bounce here anytime. And then I'd like to see another leg down, a nice 3-wave corrective move. And at that point, start examining the relationship between that, just like we did over here with the ABC. Once you have a mature-looking correction, then you can start thinking about entry. Here, you just don't have enough data to have a high-confidence entry on. But I just thought it's interesting. We dropped so precipitously in one day, and yet came into that nice 618 retracement level. So we'll keep an eye on Facebook moving forward. It certainly presented a good opportunity the last time it had a big drawdown. So we'll just have to sit on our hands and see how this one plays out before thinking about any kind of a longer term entry or a trade of that nature. All right, Serial Trader signing off.